Let's talk about Australian mining, a sector that's the backbone of the global economy. Australia isn't just about iron ore and coal anymore. Uranium and gold are now the hot commodities catching global attention. The world's construction, energy and tech industries all depend on what's pulled from the Aussie outback. Investment bank Jefferies just released a report spotlighting where the biggest opportunities are in Australian mining. Their verdict? Uranium and gold are set for explosive growth thanks to the clean energy push and economic uncertainty. Today, I'll break down Jefferies' top 5 Aussie mining stocks, why they made the list, and what you need to know before investing. Let's count down from the industry giants to the up-and-comers you can't afford to ignore. Number 5 is BHP Group, the titan of Australian mining, and a company that's become synonymous with strength, scale, and stability. If you're looking for a mining stock that can weather almost any storm, BHP is the name that comes up time and again. BHP's strength is its remarkable diversification, spanning iron ore, copper, coal, nickel, and even uranium exposure through the massive Olympic Dam mine. This isn't just a company with one trick up its sleeve, it's a global powerhouse with its hands in nearly every major resource. This mix acts as a natural hedge, giving BHP stability in a volatile sector. When one commodity dips, another often rises, helping to smooth out the bumps and keep the company on solid financial ground. Jefferies rates BHP a buy, seeing it as a core, blue-chip holding for any mining portfolio. It's the kind of stock that institutional investors and pension funds love for its reliability and scale. While you won't get wild, tenfold returns overnight, you get steady performance and a strong dividend. BHP is famous for rewarding shareholders with consistent payouts, making it a favorite for income-focused investors and retirees alike. BHP's operational efficiency and sheer scale mean it can weather downturns and negotiate better deals than almost anyone else in the industry. Its global reach and deep pockets give it a competitive edge that's hard to match. The company is also investing heavily in future-facing commodities like copper and nickel, which are absolutely critical for the world's transition to green energy, electric vehicles, and advanced technology. Even as a giant, BHP still has room to grow, especially as global demand for iron ore and copper remains strong. Infrastructure booms and the electrification of everything mean these resources are more valuable than ever. Its exposure to uranium gives it a foot in the door for the nuclear energy boom, positioning BHP to benefit as the world seeks cleaner, more reliable power sources. BHP is the bedrock, reliable, resilient, and built to last. It's the kind of company you can count on through thick and thin, no matter what the market throws at it. It's the defensive anchor in your portfolio, letting you sleep easy while collecting dividends and knowing your investment is in safe hands. But if you want more direct upside from gold and uranium, the next picks are where things get interesting. BHP is your solid base, but there's more excitement ahead. BHP is your foundation. Now let's build higher and explore the next big opportunities in mining. Ready for number 4? Let's go. Number 4 is Rio Tinto, a true mining heavyweight with a legacy stretching back nearly 150 years. But this isn't just another mining giant, it's a company with a twist, always looking for the next big opportunity. Rio dominates iron ore in Western Australia, operating some of the world's largest and most advanced mines. This region is the heart of their business, generating massive cash flow and funding bold expansion into uranium and gold. Their iron ore business is a relentless cash machine, providing not just stability but also the firepower to invest in new growth areas and weather commodity cycles. Rio owns significant uranium assets and is actively exploring new deposits around the globe, positioning itself to benefit from the nuclear energy resurgence as countries seek cleaner power sources. Their copper mines, like the massive Oyu Tolgoi project in Mongolia, also produce substantial gold as a byproduct, giving investors stealth gold exposure without the risks of a pure-play gold miner. Rio's commitment to decarbonizing its operations and leading on ESG standards is attracting a new wave of institutional investors who are focused on sustainability and long-term value. Of course, challenges like the Juukan Gorge incident forced Rio to overhaul its approach to community and heritage, but the company is adapting, learning, and working to rebuild trust. Financially, Rio is a dividend powerhouse, regularly returning billions to shareholders, especially when iron ore prices are high and profits surge. Jefferies and other analysts like Rio for its fortress-like iron ore business, its strategic push into uranium and copper, and its ability to generate strong returns even in volatile markets. It's a focused bet on the future of clean energy and electrification, with a gold kicker that could surprise to the upside as demand for precious metals grows. While not as diversified as BHP, Rio offers more direct upside in uranium and gold, making it a compelling choice for investors seeking targeted exposure. If you want stability with a growth edge and a company that's evolving for the future, Rio Tinto is your play. That's why it lands at number 4 on our list of mining giants. Next, we go all in on gold, exploring a company that lives and breathes the yellow metal. Let's move to number 3. At number 3, we dive into gold with Newcrest Mining, now part of Newmont, the world's largest gold miner. Newcrest's flagship Cadia mine is a low-cost, high-output gold and copper powerhouse. Their portfolio includes other top-tier assets like Telfer and Lihir, plus global exploration projects. Jefferies loves Newcrest for its world-class, long-life, low-cost mines, assets that thrive even when gold prices dip. The Newmont acquisition created a gold mining juggernaut, combining 2 elite portfolios for unmatched scale and efficiency. Gold's safe haven status is stronger than ever, with inflation and global uncertainty driving demand. Newcrest's assets offer leveraged exposure to rising gold prices. Profits can soar as gold climbs. Their technical expertise, especially in block caving, unlocks massive deposits and keeps costs low. Now, as part of Newmont, these strengths are supercharged. If you want a pure, high-quality gold play, Newcrest's assets are the gold standard. It's not higher on the list because the next 2 picks offer even more explosive upside. But for gold exposure, this is as good as it gets. Ready for a uranium rocket? Let's hit number 2. Here comes Paladin Energy. Number 2 on our list is Paladin Energy, a pure-play uranium company that's perfectly positioned to ride the surging wave of nuclear energy demand. As the world looks for cleaner, more reliable energy sources, nuclear power is making a major comeback, and Paladin is right at the center of this transformation. Paladin owns the Langer Heinrich mine in Namibia, a world-class asset that has just restarted operations after years of careful planning and investment. This restart couldn't have come at a better time, with uranium prices surging to multi-year highs and global supply struggling to keep up with demand. Years of preparation and strategic investment mean Paladin is one of the very few companies able to bring significant new uranium supply online right now. This gives them a unique advantage as utilities and governments scramble to secure reliable sources of uranium for their growing fleets of nuclear reactors. The so-called nuclear renaissance is no longer just a buzzword, it's happening. More reactors are being built or restarted worldwide, driving up demand for uranium and creating a looming supply crunch that could last for years. Paladin's production costs are locked in from the days when uranium prices were much lower, so today's elevated prices translate directly into massive profit potential. This cost advantage could make Paladin one of the most profitable uranium producers in the current market. According to analysts at Jefferies, Paladin represents a direct, high-leverage bet on uranium's ongoing bull market. For investors looking for pure exposure to uranium, Paladin stands out as a top pick. But Paladin's story doesn't end with Langer Heinrich. The company also holds a portfolio of large, undeveloped uranium assets in Australia and Canada, setting the stage for future growth and expansion as the uranium market continues to tighten. Of course, there are risks. If uranium prices were to fall sharply, or if the Langer Heinrich restart faces unexpected setbacks, Paladin's fortunes could take a hit. The company's high leverage to uranium prices cuts both ways. But with utilities around the world scrambling to lock in long-term uranium supply, Paladin finds itself in a position of real strength. The company is negotiating from a place of power, with buyers eager to secure its output. Jefferies believes the market still hasn't fully recognized Paladin's true earnings power. As more investors wake up to the company's potential, there could be significant upside ahead. As production ramps up, and new supply contracts are signed, Paladin's stock could be re-rated much higher, reflecting its growing role in the global uranium market. It's a classic high-risk, high-reward play, ideal for investors who are bullish on the future of nuclear energy and want direct exposure to uranium's upside. That's why Paladin Energy claims the number 2 spot on our list of top mining stocks for the nuclear age. But for the top spot, we're heading back to gold, with a twist. Let's meet Evolution Mining. Here's number 1. Number 1 is Evolution Mining, Jefferies' top Aussie mining pick. Evolution isn't the biggest, but it's the smartest, focused on quality, not quantity. They've built a portfolio of low-cost, long-life mines like Coal and Ernest Henry, driving strong cash flow. Their disciplined strategy: sell off high-cost assets, buy top-tier ones, and invest in organic growth. Jefferies loves Evolution's clear growth pipeline. Expansions at Coal and ongoing exploration mean more gold ahead. Despite its quality, Evolution trades at a discount to global peers, a valuation gap Jefferies thinks will close. The management team is top-notch, with a track record of smart deals and operational excellence. Evolution offers leveraged exposure to gold's upside, but with a nimble, modern approach. Risks: gold price swings and project delays, but their low-cost base provides a cushion. Evolution combines quality, growth, and value, making it Jefferies' number 1 pick. If you want a gold miner with upside and resilience, this is it. That wraps up our countdown. Which stock stands out to you? Let's talk next steps for your mining portfolio. Here's what to do now. Final thoughts coming up. That's the Jefferies top 5 Aussie mining stocks: BHP, Rio Tinto, Newcrest, Paladin, Evolution. Each offers a unique way to play the gold and uranium boom, from stable giants to high upside specialists. Remember, this isn't financial advice. Do your own research before investing. Dig into company reports, understand the risks, and make sure any pick fits your goals. The mining sector is full of opportunity, but it's not for the faint of heart. Which stock are you most excited about? Drop your thoughts in the comments, smash that like button, subscribe, and I'll see you in the next video.